Good evening, students. Today we will learn about the rights and duties of the rights and powers of the auditor have under the Companies Act 2013. The rights are very important because they help the auditors to perform their duties independently and ensure transparency in financial reporting. First, we will see about the definition of auditor and appointment of auditor. An auditor is an independent professional who check a company's financial statement. They are appointed under the section 139 of the Companies Act 2013. The main purpose of the audit is to make sure that the company's financial position gives a true and fair view of the records. Next, meaning of auditor. An auditor role is to verify the accuracy of financial accounts. Only a qualified chartered accountant can be appointed as an auditor. It means the auditor observe and report the financial statement of the company. Next, we will move on to importance of auditor. Auditor play a vital role in building trust among the shareholders and investors. Their independent opinion helps to prevent fraud and mismanagement. They also make sure that the company follow the accounting standards and give an unbiased opinion on financial statements. Legal provisions. The company side gives the auditor legal rights and powers. Important sections are section 143 and 146. The law helps the auditor do their job independently and effectively. Because of these laws, a company cannot refuse basic information to the auditor. Next, classification of auditor's duties. We can group auditor rights into many main types. These include the right to inspect books, right to get explanation, right to visit branches, right to receive notices, and a right to attend meetings, and a right to sign the audit report, and a right to receive remuneration. Think of these rights as a tools of the auditor need to check accounts properly. First right is the right to access to books. The auditor has the right to inspect all the books, vouchers, and documents of the company. The right to available at any time needed for the audit. It covers records at the head office and also branches. Example, the auditor wants to check a sales bill for March. The company must allow it and submit it to the auditor. Next one is right to obtain information and explanation. An auditor can ask company officers and employees for information and explanation about the financial statement. This helps the auditor to understand unusual balances or transaction before giving an opinion. Example, if stock value is high, the auditor can ask the store manager to give explanation how stock was counted, what method uh, he was followed. The stock manager gave their opinion, gave their explanation to the auditor. Next one, right to visit branch offices. The auditor can visit branch offices to inspect records. If there is a branch auditor, the statutory auditor can rely on the branch auditor report after check it. For example, a banker central auditor can visit to the regional branches to check cash records or accept the branch auditor's work. Next one, right to receive notices and communication. The auditor has the right to receive all the notices and communication that are sent to the shareholder. This helps the auditor aware of any decision or resolutions that may affect accounts. Example, if a shareholder plan to write off a loan, the auditor must receive the notice. Next one, right to attend a general meeting. The auditor can attend general meeting, including annual general meeting. They can speak about the matters relating to the audit, such as qualification and observation in the audit report. If there is any queries from the members about the audit report, the auditor can explain the reasons. Next one, right to sign report. The audit report must be signed by the appointed auditor. The signature confirms the responsibility of the auditor opinion. For example, if two auditors audit the company, the appointed auditor's signature make the final report official. He has the right to sign the report. Next one, right to remuneration. Right to get remuneration. The auditor is entitled to get remuneration for their service. The amount is usually fixed by the shareholder or the board of directors, depending upon the company rules. If the auditor is appointed by the shareholder will fix the remuneration, and the auditor appointed by the board of directors, the board of directors will decide the remuneration. At the annual general meeting, the shareholder can decide how much the auditor will be paid for the year. Next one, right to be indemnified. Protected. Indemnified means protected for the acts done in the good faith. The auditor is protected from liability for acts done in honesty and in good faith. This protection helps the auditor give independent opinion without fear or unfair law. Example, if an auditor reports a fraud based on evidence, the company cannot punish the auditor for doing the correct job. Next one, the right to report to members. The auditor must report to the members whether the accounts give a true and fair view. The auditor also states whether the proper accounting records have been maintained. Next one, right to make qualification report. The auditor finds problems that affect the accounts. They can qualify the audit report. The qualification explain what is wrong and how it is affect the financial statements. Example, if depreciation is not provided on machinery, the auditor can mention this is as a qualification in the report. Right to inquire into certain matters. Under section 143 subsection 1, the auditor should inquire into specific matter. These include whether the loans are secured, transactions are not harmful to the company, personal expenses are not charged to the company accounts, and shares are properly allotted. If the company have a big loan to a director, the auditor check if it is secured and approved. Some examples of audit report. First one is that if the company refuses to give invoices, the auditor should report this non-cooperation of the management in the audit report. Example 2, the auditor finds closing stock exaggerated, it is overvalued. The company, they should qualify the report and to show the stock is overstated. Last one, limitations. An auditor has many rights but also limits are there. The auditor cannot change or prepare the accounts for the management. Auditor depend on the information provided by the company. They must keep company information confidential. The auditor cannot change figures in the ledger. They can only report what they find. Conclusion. In conclusion, the auditor are important for the corporate governance. Their rights and powers let them do independent check. This protects investor and help the company to follow the law. Auditor act as a guardians of the financial truth. Thank you.